Financially Fluent with Ray Godleski of Southeast Wealth Partners. Our goal is to equip you with the knowledge and tools necessary to navigate your financial journey with greater ease and efficiency.
Hey, good morning, everybody, and welcome to the next episode of Financially Fluent. Today, we're going to bring on Alex Knapp. We're going to be talking about insurance, whether you're protecting your home, your car, any kind of unexpected surprises. Alex can be able to help you. And I've known Alex for a long time. So while I think about him as insurance, I also kind of think about him if I need somebody on my golf foursome in a scramble. He's one of my main guys I'd like to look to. So Alex, welcome to the show. How are you doing today?
Doing well, Ray. Thanks for having me, man. I appreciate it.
Good. How's the weather there today?
It's not bad, a little cloudy, but sun's always is constantly trying to peek through. So we're going to make it.
Awesome. Good deal. Well, like I said, we've known each other a long time, so I'm so glad you're here on the show today, and just wanted to, go ahead and share a little bit about your background, what led you to insurance, what kind of keeps you in it.
Sure. It was a very unique, actually, because I've been in sales pretty much all my life, right? And when the market crashed in '08, it was really hit the residential side of things first, and then '09 kind of crept in and hit the commercial side. So I was in commercial sales, and I tried to hang in there, for as long as I could. However, the economy was just so bad. There weren't there were very few jobs to bid on, and if they were, it was very cutthroat. And dealing with contractors every day, no offense, but they're not the most ethical people in the entire world. However, I still have really good friends in the industry because, again, not everybody. But that being said, it just started to feel like, man, almost 15 years in that industry, and I was really exhausted with it. So I had actually had one of my former clients that I called on reached out to me and said that he went to go work at Liberty Mutual and thought that insurance would be a great thing for me to look into. And so I just kind of started asking around, because ultimately what I wanted to try to find was something that was recession proof. Now, if you go back just 15 years ago, I never would have thought insurance would have been it. So ultimately, I truly feel and believe that it was God's plan for me to be in this position. So after taking his advice and going through the training, the licensing, and all those things, and I really started to learn and understand about it because only thing I knew about insurance is that we had to have it, right? As the consumer, we had to
Right.
have it. For home, for auto, for life, for all the things. And the more that I started digging into it and actually being able to start selling, I started seeing the impact that I was making in people's lives and in their households. Um, and that just made my passion for it just grow even more because I tell people every day, I'm not the insurance police, I'm your insurance coach, right? And so, I'm here to help people regardless of whether or not they're a client or not. I always tell them they can still reach out to me. Because I'm always happy to help and aid and assist in the things that they may not understand that I do.
When we talk about insurance, I mean, especially on the P&C side, the claims is how does that company handle claims is a big thing. But, just thinking from a big picture standpoint, anytime we're doing financial plans for folks, we're probing a little bit. I didn't used to maybe early on, but now we don't do this, obviously, right? We like to kind of refer out to folks like you that are lots of carriers to work with, but what would you say, why does it even matter? It- Homeowner insurance and auto and I'm amazed how many people don't have an umbrella. We might get in that later, but why does it really matter?
Well, I mean, just like most things, insurance isn't a one size fits all, right? Yeah, I tell people this too frequently that, between you and I and two other people, we can all go get a quote on the same house, the same coverages, same deductibles, and we'll have four different rates, right? And carriers have different appetites as far as the type of risk that they want to try to bring onto their books. So it's my job is kind of not only just to be the sales rep and the liaison between the carrier and the client, but to also protect the client and protect the carrier, right? I see far too often where there's agents or companies that put in data that just isn't accurate, and data integrity is big. And I'm sure we'll get into a couple of things later, if I have to guess, that we'll talk about that can come into play when it involves things like that.
Right. So is there any kind of thing you see more repetitive as kind of just a common misstep that people are taking right now when it comes to their insurance plan?
Yeah, I would say a couple of things. One, I refer back to the part of being the coach and not the police, right? Um, People have gotten into a habit with any little thing that happens at all, they're automatically reaching out to their insurance company. That's what the agents are for, right? We're here to delegate and make suggestions based on law and the underwriting criteria and the carrier's rules and regulations. All the little fine print things. So um, uh, now what I see and that is that we get what's called every carrier has to run a clue report. Now, a clue report is an acronym for comprehensive loss underwriting experience. A clue's run on a home quote, a clue's run on an auto quote. It's going to show any type of losses that on the home side is associated with the risk, right? The house itself. And on the auto side, any type of incidents. So it could be a tow, it could be a glass only, comprehensive claim, at fault, any of those things are all going to show up on a clue report. And my goal is to keep people's clue reports as clean as possible. So that is insurance 101 is to try to get people to utilize their agents and not utilize the 800 numbers. And that's it's the downside to some carriers, right? And I'm not knocking USAA, great company. But it's an 800 number, right? And you don't have an agent to kind of ask questions back and forth with or troubleshoot or figure things out. They're automatically sending you to the claims department, just like any other, big carrier, the Geicos and the State Farms. Those folks, you're going to see that. I would, again, just strongly recommend that people utilize their agent before they go calling the insurance company, because insurance has gotten so tight over the last couple of years, Ray. People with, 1 0 paid claim might not be eligible to have their rate shopped around.
Yeah.
That's how tough it's gotten.
Well, so right now I'm thinking, we look over the last few years, look at these home prices, right? They're going up
Hmm.
tremendously.
Yep.
I'm not sure how much of that is associated to land values and building values, but nevertheless, what should people be thinking about, with these? I'm assuming, I'm making an assumption here that some people are underinsured on their homeowner insurance. So what should people be thinking about when it comes to homeowner insurance and the premiums, and what are like the main things they really need to be honing in on right now?
Sure. Well, just to be clear, first and foremost, insurance does not base their coverage off of market value, right? They base it off of the size and the makeup of the home, interior and exterior. That is
Mhm.
that is what they're looking at, right? And it doesn't matter if that. So let's take, for instance, like a house in Buford, right? Versus a house in maybe south side of Atlanta, Conyers, Covington area, where the values are a little cheaper, but the coverage amounts are still going to be vast, right? I mean, if you've got a 4,000 square foot house, regardless of where it is, it's probably going to have a coverage of about 225 to 250 bucks a square foot for a replacement cost. Right.
Yeah,
So
yeah,
those
that's
the home values have zero to do with insurance. I'll give you another great example. Downtown Atlanta, right? Land's premium down there. You can buy a 1,200 square foot house for about $900,000, right? I'm not going to cover it for $900,000. That just doesn't even make sense,
right,
right? But I will cover it based off what the carrier's replacement cost estimator suggests.
right. But these building costs have gone way up, and of course, those prices fluctuate way faster than an actuarially you can kind of account for. So, I just wonder for folks that do have those big houses, that's a really good point. So maybe they have a big house and maybe the land value is kind of modestly appreciated. Is it possible that they're underinsured to rebuild that house?
I mean, it's possible depending on where their coverages are, right? Who their agent was. Is it even rated properly? I can't tell you how many people that have sent me a declarations page for their property that says that they are a 2-story on a slab when they have a fully finished basement, right? Obviously, that these people are going to be undercovered because their carrier is not accounting for the basement.
And now a quick message from today's sponsor. This episode is brought to you by Southeast Wealth Partners. If you've been listening to Financially Fluent, you know we're all about making smart money moves, whether it's planning for retirement, protecting your family, or building long-term wealth. But everyone's situation is different, and that's where the team at Southeast Wealth Partners comes in. They take the time to understand your goals, your challenges, and your values. To learn more and connect with their team, visit southeastwealthpartners.com. Southeast Wealth Partners, your next step toward being financially fluent.
Let's shift gears a little bit because this is close to me with kids that are teenage drivers. Auto insurance is nowhere close to what I'm sure my parents paid many years ago when I was driving around town. Let's talk about auto insurance a little bit. What are some things we need to be thinking about that? Because they sure have gone up a lot.
Yeah, especially throwing kids into the equation, the numbers don't lie. The kids are prone, based off of statistics, to be involved in the most incidents, right? Whether it's them backing into something that they didn't see, or they were texting somebody while they were pulling into a parking spot, or even hit a concrete bollard for that matter. There's no surprises anymore in this industry. I say this all the time too, and I hate saying it but I'm out in it. You're out in it. We see it all the time. People don't take driving very seriously, right?
Right.
If they did, they would cherish their life a little bit more and not drive the way that they do. There's consequences for things like that. And Georgia being one of the most litigious states in the country, people are going to find a way to try to make some money off of it. And I do understand that there are accidents with legitimate claims, and I'm not taking anything away from that. I've been victim of it myself, to where my insurance had to cover a large sum to take care of all the bodily injury that I was exposed to. That was prior to insurance, but it also helped me know the importance of it as well, too, right?
Right.
But the kids are going to be expensive on policies. I've seen to where you've got a husband and wife, 2 cars, their auto insurance $2,500 roughly. Then they add a kid, and it goes to $6,000.
Yeah.
Right?
That's true. Yeah. I mean,
I
is there
remember years ago you did experience something relatively similar, right?
Oh yeah, it's rough. Yeah.
But that's the flexibility of, having an independent agency. If one carrier is too high, you might have another carrier that, hey, our exposure and loss ratios based off of teen or youthful drivers is better than average. So we're giving better rates for it. Right. So just obviously one of the things that causes it, again, the litigation piece of it, the drive around any road in Georgia, and it could be a 2-3 mile stretch. Count how many injury attorney signs you see. Right, they're
Right.
everywhere. Right, have you been to a Braves game last year?
Right.
John Foy is peppered all over that stadium. He's got a strong arm on Truist Park, right? And I don't know how much it costs to have his name all over that place, but I know it's not cheap. But good news is, if there is any light at the end of the tunnel, Georgia finally did pass tort reform, which is a legal abuse bill.
Right.
And we're not going to start seeing the repercussions of that as of right now, just simply due to the fact of all the number of cases that are tied up in the court system right now. Right.
Are there any other states that have done that years ago and already are starting to see the benefits?
Yes. Florida, for one.
Okay.
But there's many other states that are, and who really pushes for this too? It's really the corporate side. Think about the large companies in the state of Georgia were the ones that were able to finally get it across the finish line. It's those companies that have large fleets of vehicles that are out there, right? I mean, there's companies
Yes.
with hundreds and hundreds and hundreds of vehicles out on the road, and the insurance premiums for these people are ridiculous. It's unbelievable the amount, because commercial insurance is far more expensive than personal. But the cost for them that they have to pass on to the consumer is just another reason why, another piece of that inflation, right?
Yeah. Yeah. Well, when it comes to, uh, folks that have teenage drivers, but then they go to college and eventually they graduate, hopefully, right? And they have jobs. Are you seeing a lot of parents might keep them on an auto policy, a year past graduating or 2 years into a job? Like, what are some things you're seeing, and and who knows, maybe they reimburse each other. I don't know, but do you see some of that where they stay on for a while?
Like that reimbursement factor, right? It starts the
Right.
it starts to train at an early age the impact that insurance could have on you if you do decide you want to go out and drive like an idiot. Right. Or not, or again, while you're behind the wheel, driving's like the third thing you're doing, because you're playing with the radio and checking your texts and you're doing all the other things that are clearly not more important than paying attention to the road. Uh, but what I see most often and coach on most often is, first and foremost, you can't just say, "Oh, my kid's off at school. I want to remove him from my insurance," right? They don't have a car with them. And you can't do that because they're still a dependent of the household, right? And if they're off at school and they don't have a vehicle with them, typically carriers will offer what's called a student away at school discount, which isn't bad, which means they are more than 100 miles away from home without a vehicle. So obviously their exposure to the risk, the policy itself, is going to be far less. But even if they do have their vehicles and they're away, you're going to pay that additional premium, right? But what I see more often and coach more often is that it's good for kids to stay on their parents' policies. I won't say kick them off at 18 or kick them off once they graduate college. It's not fair because the carriers will allow, typically at 26 is when the carriers want to see the kids get off onto their own policies, because usually by that time they're not still in the household, right? We want to keep licensed household members on the policy. Now, if you want to pay for them in a separate policy, you're welcome to do that, right? But they're going to benefit from the parents, especially if they're homeowners, because insurance companies treat homeowners differently than they treat renters. So even if the child is in the household and the parents say, "Hey, we want you to get your own policy," that gets into a totally different subject of stacking in the event of an incident. But at the same time, it's going to cost them more to get the insurance. They're not going to have the multi-car discount. They're not going to have the multi-policy discount. And they're also not going to have that home ownership discount, which is applying to their vehicle under their parents' policy. Right.
Yeah, that's a good point. You just made me think of, we're talking about the young ones, right? That are, maybe they're doing a side hustle. And so if they are an Uber or a Lyft driver and they don't contact their insurance company, or what kind of risk are they taking on?
Well, they're possibly looking at a situation where they may not be covered. Right.
Is there a limit to like how many hours or miles per month they can do without having to get additional coverage?
No, no. I mean, for those that do it, let your carrier know if they don't offer typically carriers nowadays are going to offer a rider on their policy that says, "Hey, if you do Uber or Lyft or Uber Eats or what have you, then we can offer coverage for you, but you have to check this box," right? There's going to be there's going to be a little surcharge that's going on there for it too.
Wait, what is it? Is it 5%, 20%? Like what, just, I know I'm not gonna hold you to it, but just ballpark it. What's the incremental cost?
I would guess roughly 10%, maybe more, depending on the carrier. It varies between carriers, and it's not something that I've looked at a whole lot lately because
Yeah,
I don't, I guess you have to ask the questions for it, which I
right.
do ask. I do ask a lot of questions, but I assume that most of the people that I deal with on the corporate side of things, that they're not running around doing Uber Eats or Uber drives back and forth to the airport, at night.
Well, I know this makes me think of this was a long time ago. I can't remember how long ago this was. I remember talking with somebody, and I told him, I was like, you need to have some umbrella coverage. And they're like, oh man, that was really expensive. But I think what they were trying to say was they had such low minimums on their home and auto that those had to be raised a little bit to get an umbrella policy. So let's talk a little bit about what is an umbrella coverage. I'm still surprised at people that have $1 million or more, like liquid, or in retirement accounts, and they don't even have an umbrella coverage policy. So let's talk about that a little bit.
Yeah, sure. I mean, for as cheap as it is certainly worth its premium. Again, given the litigious nature of the state of Georgia, if you've got teen drivers, if you've got swimming pools, if you've got rental properties, maybe you just like cars, there's so many different scenarios to where, they're so cheap as far as the premium for the umbrella. Like you said, getting to that coverage that you have to have in order to qualify for the umbrella, there may be costs also associated with that. But once you get to that point, the umbrella is going to be minimal, $200 to $500 for the year. But they're a la carte also. So they kind of cover, per driver, per vehicle. It's just a home, single home and 2 auto, you're probably looking at 250 to $300. You throw kids on there, youthful kids on there, there's surcharges for that. Usually about 125, $150 a kid. But everything you add or take away will either increase or decrease the premium on an umbrella. So let's say you've got the primary house, you've got your secondary house, you've got jet skis at the secondary, you've got a nice little pontoon boat. And then you've got, like a four-wheeler. Well, all those things can be covered underneath the umbrella with proper coverage. They all have to have the same coverage on it to qualify for it, but all of those things can be covered. And if you say, "Oh, I sold the pontoon, sold the jet skis," boom, boom, we take those away, and then the premium decreases accordingly.
So let's take a step back for a second, because I don't, for an umbrella policy, let's give an example of, hey, let's take an auto wreck example. Maybe you had bad luck, hit a doctor or surgeon, or, or who knows, it could be even a lawyer that maybe that they lose some brain damage, right? So in that situation, first of all, my first question would be, what's the minimum auto insurance they could have to have $1 million of umbrella coverage, and what's the minimum auto insurance they would need to have $2 million of coverage, and kind of walk us through like how that helps in that situation. So
Sure,
you
right.
could
The
come up
umbrella
with one.
is just additional liability protection, right? It covers you against any of the liabilities. So that car accident, right? You're involved, you're at fault. The other party sustains a terrible injury. What it's going to do is it would exhaust the liability limits on the auto side. Typically, every carrier in the marketplace has a minimum of 200, either 250, 500 split limits, right? Or a $500,000 combined single limit. I'll tell you more about how those work in just a second. But you have to have those limits for liability in order to qualify for that umbrella liability, right? So again, in that case, it would exhaust the liability limits on the auto for $250,000 per person, up to $500,000 per occurrence. So if there's 3 people in the other vehicle, they all sustain injuries, it would split that $500,000 3 ways, or according to his or her need, up to that limit. Then the umbrella, anything above and beyond that to $1 million would kick in, and you have that additional layer of coverage. $2 million umbrella is typically going to be just little less than half of what a 1 million would be.
Okay. So now, if someone has their auto insurance with one carrier and then they have their homeowners with a different carrier, do they get 2 umbrella policies in that particular instance?
No, typically the umbrella is going to follow your auto. Whoever you do your auto
Okay.
with, you can do an umbrella with, but whoever you do your home with, if your auto's not with them, you can't do an umbrella.
Okay. Now, let's say something bad happens on someone's property, though. What's going to cover them there? Just a higher homeowner policy limit, or how are they going to cover themselves on that?
As for what? Say like a tornado or?
No. I'm saying like you had a party and unfortunately the deck fell down, or
Mm.
you know what I mean, the diving board broke on the pool, something like that happened. You know?
Yeah, well, same scenario would apply, right? When the claim's filed, they're going to exhaust the liability limits on the home policy, which would be a minimum of 300,000, right, of coverage that you would have to have. So it would exhaust that, and then you have $1 million on top of it, right? So just
Okay.
like the auto, essentially on the home, you would have 1.3 total in coverage. If you have 500,000 liability on the home, it's 1.5 if you add the umbrella to it, right? So that umbrella just kind of goes above and beyond. But in the same fashion, anything that you would be deemed liable for would constitute for the umbrella to kick in once
Okay.
once once your liability limits are exhausted.
All right. No, that's good. That's
But
good.
for the home and for the auto, you see, the umbrella encompasses all, right? Like I said, it's going to do
Okay.
the home,
That's what I
it's going to
thought.
do the auto, the jet skis, the motorcycles, the RVs, all the toys.
Right. Right.
Everything's underneath the umbrella.
So if we were to give some tips on savings going back to maybe auto, what are some of the best discounts? For example, good student discount, defensive driving. Like what are some ideas around that? Or if they have multiple kids that are driving around, like you got any kind of tips you don't mind sharing on what they could do to save some money? Because it is expensive.
Yeah, it's good. It's super expensive. If still in school, 3.0 and above gets you a good student discount, right? Any type of defensive driving training. I've gotten really now where I'm hitting the parents on them, right?
Mm,
I just did one about a month and a half ago. Cost me $20. It's good for 3 years. Made my premiums go down about $125. So times three, that's 375 for a good $20 investment. As far as a financial planner is concerned, that's a pretty good ROI, right?
right, right. Yeah, yeah.
And guess what? In 3 years, I'll do it again. Carriers will allow you to apply that discount as long as you've had, typically each carrier, again, they're not all the same. They have different appetites, but majority of them, if you've got everybody in the household has 36 months of clean driving history, no violations, no accidents, they can do a defensive driving course to help lower their premiums.
Okay. And how about credit scores? Do those impact them much or not really?
Yeah, sure. Well, I mean, do you have people call it credit on the insurance side? It's not credit. It's probably more based off of your FICO or insurance scoring. But again, that part of it goes back to what I mentioned earlier. You and I and two other people can go get the quotes on the same house, same coverages, same deductibles, and we'll have four different rates, right? So everybody's going to score differently. Zip codes are going to score differently because, insurance bases their rate off of the law of large numbers, and they break that down per zip code, right? So for every dollar of premium they're bringing in, how much are they paying out in claims, right? And if they're in the red, they've got the goals to get to the black because insurance isn't a not-for-profit business, and it's hard to operate out of the red. But we've seen a lot of that though over the last couple of years, and that's why we've seen some of the increases we've seen.
That actually makes me think about deductibles. So for a car deductible, what are some of and I like to talk about trends too. Like, are you seeing a particular trend in the auto insurance as well as homeowners? I know with all these roof replacements that we see and disastrous plumbing claims and things like that. Well, what are some of the trends you see when it comes to deductible strategies for both auto and home?
Yeah, well, I'm going to try to always push a higher deductible. Cars are pretty cut and dry, right? It's typically going to be a $5,000 deductible on the collision just because of the impact that it would make on it on the premium. If it's $50 a year to take it from 500 to 1,000, I don't think many people see the value in that, right? But if you've got $1,000 deductible and looking at a $2,500 deductible on the home, you can see a $400 decrease in your premium, right? So what is the likelihood? First of all, what's your appetite, right? As the insured, how much could I afford out of pocket emergency? God, Lord willing, something happened to the house, right? Um, is it $1,000? Is that going to put me in a financial peril? Is it $2,500? Is it, hey, I don't know, I've got an emergency fund, 20 grand, put a $20,000 deductible on it for me. It really is going to depend on each person and their appetite for what they want to see.
Are you seeing any trends with roofs? Like are the insurance carriers starting to, treat those differently? Like what are we seeing out there with these roof replacements?
Yeah, I'll just say they're pretty much tired of replacing them. Over the past several years, I've had a wonderful opportunity to be involved with some good real estate offices. And I've heard roofers go in there and say, hey, we can get your clients a free roof. I'm like, no, you can't. It's not free for anybody, right? It's not free for the insured. It's not free for the carrier. It's not free for the roofer. I don't even know how they can promote insurance fraud that way and get away with it consciously. But but there's a lot of them also that do not. I know some great roofing companies and great contractors. But, that happening over the course of so many years, insurance companies' responsibility is not to cover you for routine maintenance, right? So if you've got a 17-year-old roof, right, and it hasn't leaked yet, you're lucky, number one, but number two, that thing's pretty much on its last leg and it's time for replacement. You get 4 bald tires on your car, Ray, what do you do?
And get new tires out
That's
of
right.
pocket.
But do you file a claim with your insurance
Nope,
company to do that?
of course
No, you
not.
don't. You put new tires on your car, but your roof is essentially the tires of your home. So that being said, people have treated their homeowners policy as a maintenance policy for so long that carriers are finally saying, we're not doing this anymore. Right. We've got to put some of the onus back onto the homeowner because it's our responsibility as a homeowner to maintain our property. Right. So I've seen a lot of pushback here over the last couple of years. Carriers are looking at it from the standpoint of how old's the roof that we're rating on this property. If it's 10 years old or older, we don't want to touch it because statistics show we're going to be on the hook for putting a new roof on this house in the next couple of years. Right. So it's gotten very tight. Personally, I think the carriers need to move to what is called a payment schedule. That way from day one, they know what it's going to pay out in the event they file a claim on their roof. Right. Or they do what Florida does and go with a wind hail deductible of 1% or 2%.
Yeah,
Because I don't, and it seems very logical to me, but for someone
right.
that has that 17, 18, 19-year-old roof, it shouldn't be on the insurance to go and put a full replacement on there for $1,000 or $2,500 deductible. It's still, there's wear and tear that has occurred over the course of years. It wasn't that last storm that came through that caused the damages, right? Like it was a buildup over time. And so, again, with the luck of not having it, again, it's our responsibility to keep that maintenance on it. And if our house needs new tires, put some new tires on it.
Yeah. Well, we've kind of covered a lot of ground here with homeowner and auto umbrella policies,
Mhm.
and some people have the same captive agency for years, and there's nothing wrong with that. That's great. But if somebody
Mm-mm.
was wanting to get in touch with you guys over there, who look at lots of different carriers, would be a way to someone could reach you, Alex?
So I just would tell people to reach out on my cell phone, 678-697-1908. That's the easiest way. It's always on, but I'm on it a lot also, right? So if I do miss you, then I will be happy to return that call as soon as I'm able. We have a website, www.gableinsuranceGroup.com. It's about to be going under some construction from when I purchased the agency end of last year. Um, so that'll be getting updated here very soon. I have an amazing assistant as well, Ashley, and she is an incredible help to me. And without her, I'd say I'd be bald, but I already am. I'd probably lose my mind, you know?
Yeah, there's something to be said for having good help on the team for sure.
Well, 100%.
Well, I think I gave you a little heads up. We're going to do some trivia today. So, I like our guest to ask a trivia question. I try not to stump people, but I'll be honest. I run it through chat and it gives me some tough questions at time, but I wanted it to be Cleveland related. We're not doing Buckeyes today, but we're going to do Cleveland related. So
Oh God,
let's see how you do with this one, Alex.
boy.
I know, and you're a young guy, right? Maybe Bob, but you're a nice young guy. So,
Hey, you don't have to
1981
sweet talk
strike,
me, Ray. I already like you.
1981 strike shortened season, which Cleveland Indians pitcher led the American League with an ERA of 2.4. You need a hint? Let me know.
1981. I was 5.
Yeah.
But let's see. Did he also pitch for the Braves?
I don't think so. I will give you a hint. First initial B, last name begins with a B.
Bert Blyleven.
Yes. Yes.
Okay. All right.
All
Boom.
right. I'm going to develop this trivia all-star team before this year's over. So
Yeah,
nice
just
job on that.
like on the Manning cast where they've got the board up there and you pick like what the next play is
Right. Yeah.
to score the touchdown. Is that it? Is that my only trivia question?
That was the only trivia question today, my friend.
Sweet, man. Batting 1,000.
I mean, you know, I had one guy who surprised me. He like boomeranged it back to me. He's like, well, what about this? And I had to answer the question. I think I got it wrong, but yeah, that was all I had ready for us today.
That's okay,
But,
man. That's okay.
Yeah. Yeah. Well, look, man, this has been fun. For our listeners out there, remember to like, share, and subscribe to the show. We're on all the major platforms, Apple, Spotify, YouTube. Until next time, I'm your host, Ray Godleski. This has been Financially Fluent. Have a good one.
Thank you for listening to the Financially Fluent podcast. Click the subscribe button below to be notified when new episodes become available.
This communication is for informational purposes only and should not be considered tax, legal, or accounting advice. You should consult with a qualified tax professional, accountant, or legal advisor regarding your specific situation before making any financial decisions. Investment advisory services are provided only in compliance with applicable laws and regulations. Ray's opinions are not based on the specific financial situation of any investor, so they may be unsuitable for some investors. The information on Financially Fluent does not constitute a solicitation of the sale or purchase of securities. You should consult a professional advisor before executing a security trade or taking any other action based on information contained in this program. Securities and investment advisory services offered through Osaic Wealth, Inc., member, FINRA SIPC. Osaic Wealth is separately owned and/or other entities and/or marketing names, products, or services referenced here are independent of Osaic Wealth.